All right, we're getting near the end of our summer school session, and hopefully you're learning a lot of useful information that you're going to use once you get out of school and maybe in college and beyond. A couple things, I really focus in on is money management, saving. You kind of saw in some of my videos you should save and stuff like that. Now you're ready for the big time stuff. And this website is called the SEC.gov, and basically all publicly traded companies in the United States have to be listed through the SEC. So they're closely regulated, and then also they have to meet compliance standards. They have to report their financial statements a certain way, and that's kind of what accountants do, is that they are preparers and then they're also users of this information. So just to kind of show you, because I know a lot of you aren't going to be business majors, I just want to kind of say, hey, this is going on in the world around you, because through a lot of the readings that I've been going over, a lot of you guys are surprised, especially with Unit 2, you were surprised with what is going on with the government deficit, and these are things that you need to know about, because you're not going to get this in your normal education classes that you take in college unless you decide to become a business major. So I'm going to pull up a company you guys are all familiar with. It's called Apple, and you can see how quickly I could get this information. I'm going to go to the 10K here. The 10K is the annual report for Apple, so we're going to go to the 213, and you can see this is the report that they have to file with the SEC. It's their annual report, and I'm going to just kind of scroll down here, and I'm going to go to the income statement. So the income statement, I just want you to kind of maybe be impressed or maybe be curious about kind of what goes on, because I'm sure if I walk into many of your homes, you probably have an Apple product laying around, maybe 2 or 3, maybe some replacements from older ones that maybe you've had when you were younger. In 2013, Apple sold $170 billion worth of product. You could see the number says 170,000. But remember, that number is in millions, so you would add 6 zeros to that. That's $170 billion in sales. When you take out the cost of sales is what goes into the product, you're left with a gross margin of $64 billion. So there's still a lot of money there. But as we work our way down, we have research and development, so they're spending $4.4 billion on researching new products, $11 billion on running the company. Total operating expenses of $15 billion. Its operating income's $48. You take out other things, taxes, this, that, and the other, they're left with $37 billion. So you start off with $170 billion sales, your profit comes out to $37 billion. Pretty solid. If we look over the last 3 years, that trend line went from $25 billion to $41 billion and then to $37 billion. Now, if we go and see kind of what the company then has in assets are things that they own of value. They have $207 billion in assets. And so the most impressive number here is they have so much money, so much cash laying around, that instead of investing it in its own company, they actually have invested it in long-term securities. So they got $106 billion in long-term securities and $26 billion in short-term securities. So they're sitting on roughly $132 billion in investments. It's just incredible. Liability is what they own. We see Apple has, they owe $83 billion to people. And so the difference between what they own of 207, we take out that 83 of what they owe, and they're left with a net worth of $123 billion. So we, as business people, we analyze companies, we look at how they're doing, we're able to read this report, we're able to use the report, we're able to interpret these reports. And these are financial statements, and really looking at all of you guys are going to have your personal financial statements. So on there you're going to have the amount of money that you're going to make, and we'll call that for you guys your your income, and then you're going to have all your expenses. So as you went through the budgeting process, I tortured you a little bit there with expenses and all that kind of stuff, and then you're left with money left over at the end of each month. But remember, the most important bill for you guys is to make sure that you pay yourself first. So make that savings dollar amount, and I recommend 15% of your gross pay, whatever that comes out to, whether you make $20,000 or $50,000 or $1 million, you want to save 15% of your pay. If you guys do that one little thing, you will be extremely happy that you said, hey, Mr. Navickas told me to do it in my online summer school course. And when you're 40, when you're my age, you will be over the moon on what you've accomplished financially from that perspective. If we look at the balance sheet, you'll have a very healthy balance sheet. You'll have way more assets than liabilities. And the problem that our young people have is they acquire so many liabilities that as soon as they lose their job or whatever, they run into financial difficulties. So my knowledge of financial statements, I could take that knowledge and relay it back into personal finance. All right, so Unit 1, you did your career. Unit 2, you did the economic stuff, looking at the economy. Unit 3, you got into savings and the checkbook and all that kind of stuff. So I'm going over that right now, and then obviously I got Unit 4 and Unit 5 to go through. You're working on Unit 5 this week. So email me if you have any questions, and I will be more than happy to. I've been getting back to your questions pretty quickly, so if you have any questions, let me know. All right, guys. Happy budgeting.